Hi everyone, welcome to today's morning report on Wednesday the 28th of October with me, Richard Perry, market analyst at Handset Markets. It is FOMC day and the Fed has been meeting yesterday and will continue today and give its statement this evening. Don't forget it's at 6 o'clock UK time this month, and that is because obviously the US clocks haven't gone back yet, so it's an hour earlier in European trading hours. But there's no expectation of any sort of rate hike yet. There could be a bit of a tweaking to the statement. I think that's the main thing that you could well see, and I think it's more aligned to the fact that the markets have settled a little bit since the September meeting, and also I suppose you could argue that China's cut rates again for a sixth time. So there could be a bit of a tweaking to the line about international developments, but broadly speaking, there's not really expectation of too much in the statement. So in front of that, what have we got to impact on the markets? Well, the markets are fairly settled. Certainly, the currency markets are fairly settled. Let me just show you how the dollar is looking. Dollar on the dollar index, which broke above that key sort of pivot level at 96.30. I've got this on this trade-weighted dollar. It's sort of now playing around with this downtrend, this big long-term downtrend in place since March. So it'd be interesting to see what happens here. Is sort of consolidating around this level as the FOMC sort of meets, and quite how it happens. If there's a hawkish move by the FOMC, you could well see it sort of moving towards that reaction high of August, which I think would equate to 108.10 on the euro-dollar chart for any ones who are trading euro-dollar. So that's interesting. But across other markets, the oil price has been a big sort of factor in recent weeks and months, sliding sharply over the last couple of weeks, back to that 43.20 key support, that key September low. Broke down on an intraday basis, closed at 43.20, bang on that support yesterday, and has slightly bounced today. So we're not calling a breakdown quite yet, although obviously that has broken on an intraday basis, not confirmed yet. But there is certainly pressure to the downside on this oil price at the moment. We have got the oil inventories out today, the oil stocks for the US. Last week at 8.0, and the expectation is for 3.5. Again, an inventory build, as it has been for the last few weeks on these oil inventories. So again, that wouldn't be all that supportive of the price. That would be putting pressure to the downside. So be interesting to see what happens there. That's at 2:30 today. Other than the Fed today, we've also got the RBNZ actually announcing monetary policy. It's not expected to cut rates from 2.75%, but it'll be interesting to see what sort of stance it takes. It's more than likely to take a dovish stance in light of the continued downside pressure on milk prices, and the market may take that as a negative. At the moment, the Kiwi is about 0.5% lower. Interesting that the Aussie is also strongly lower today, and that's after inflation in Australia fell worse than expected to 1.5%. And that sort of comes ahead of the RBA next week. But in terms of the Kiwi, the pressure is to the downside at the moment, and that sort of takes me nicely onto my chart of the day, which is the Kiwi. And what we have got is in the last few weeks, we've sort of seen a bit more of a consolidation, really, turning into a bit of a consolidation triangle. And within that, though, I think that there is negative momentum. Look at these stochastics falling away. They're at a 4-5 week low. You've got the MACD lines, which have sort of certainly stopped advancing anyway. You've got the RSI falling a similar sort of 4-5 week low. So the upside momentum has certainly been lost in this move to the in terms of the recovery late September, early October. And it certainly looks as though pressure is growing to the downside, maybe a test of that 66.95 level. Ultimately, the support comes in at 66.15, which is that reaction low from sort of mid-October. If you see that, then that would complete a top pattern. So it certainly looks like this consolidation is turning into more of a possible range, if not even a top pattern. So 66.95 is the key support to look out for near term. but certainly the momentum indicators on the daily chart are suggesting that that will be seen. That pressure is growing to the downside. Here we see on the hourly chart, nothing too significantly bearish yet. So for example, the hourly RSI is not really sort of pushing to below 30. If you did start to see that happening, then yes, I think that then you'd certainly see pressure on that 66.95 level. But I think at the moment you're just seeing a rolling over effect. Certainly seems as though the pressure is growing though to the downside. You're trading below all the moving averages on the hourly chart. So I think you'd be sort of looking out for sort of little selling opportunities, little rallies as a chance to sell. But don't forget, we've got both central banks announcing monetary policy today, so likely to be volatility tonight on this Kiwi chart. But in front of that, I wish you good luck in your trading, and I will speak to you later. Thank you.